it's been a long wait for the Finance Minister, Ken Ofori-Atta, who is expected to seek Parliament's approval for government to spend about 27 billion cedis for the first quarter of next year. Now, this is what Joy Business has picked up as he prepares to present estimates covering expenditure and revenue targets for the first 3 months of 2021 to the House. We'll be going to the House for the latest, but here's George Afe with some more insights into the Finance Minister's presentation today.
The same with Dr. You did.
The election, it was Parliament for approval will, however, be slightly lower than the about 27 billion Ghana cedis that the Finance Minister is likely to seek approval. The presentation is not a budget statement, but rather a move to ensure that whoever is managing the economy come January 2021 will have the legal backing to spend up to the amount being proposed. This is to ensure that whoever is managing the economy as the Finance Minister come next year will be able to pay salaries of workers in the public sector during that period, and also take care of other pressing needs and ensure that government machinery doesn't grind to a halt. This is because the Constitution and the Appropriation Bill requires that any money drawn from the Consolidated Fund must be approved by Parliament. However, the government of the day, or whoever wins December 7 election, will have an opportunity to present the major budget in March 2021 to Parliament. However, sources say the Finance Minister may use today's presentation to make a strong case for improved revenue mobilization to deal with the rising government expenditure as a result of some social interventions undertaken for this year. The proposal has been influenced by the country's low revenue levels in comparison to the size of the economy. Some economists have told Joy Business that whichever government that will take over from next year, that is 2021, might be faced with taking some tough decisions to deal with the low revenue levels and financing the high budget deficit. So there's some tough times ahead.
That was George Afe's report. As you've indicated, the Finance Minister is yet to appear before the floor of Parliament. Let's take you there live where there's currently a debate going on. As you can see, let's listen into what's happening right now.
In conclusion, this report also does not tell us about what happened to the effectors that were seized from the small-scale mining sector. What happened to them? The report should have captured exactly what happened to the excavators. But with these few words, I support the report. I hope that the 2020 report will deal with those matters decisively. Thank you so very much.
Thank you very much. Honorable Minister, if you conclude on behalf of the majority.
Thank you, Mr. Speaker.
The House attending to other business at this moment. Let's join our parliamentary correspondent Joseph Opoku-Gakpo with the latest from there. Joseph, they are not discussing the budget. They are attending to something else. What's happening where you are?
Leslie,
Hi, Joseph. Can you hear me, Joseph?
Can you hear me?
Yes, I can hear you. So we've just monitored the feed from Parliament. It appears the House is attending to other business. What's happening?
So the House is currently dealing with the budget performance report in respect of the Ministry of Lands and Natural Resources for the period covering January to December 2019. That's what they are dealing with. And you heard Inusa Hussaini, who is the MP for Tamale Central, asking questions about what happened to the excavators that had been seized following the fight against illegal mining. And also he's been asking questions about what has happened to the fight against harvesting of illegal rosewood in the savannah areas of the country. So the House has actually been dealing with that. We are all awaiting the arrival of the Finance Minister, Ken Ofori-Atta, to come deliver the statement in question, which is something that we're expecting that he'll be dealing with. In fact, we've gotten some details confirming the figures as Joy Business did put out earlier, as far as the amount the Finance Minister will be requesting is concerned. Let me just read this document to you. What the House will be doing is that the House will be seeking to give approval for the President to authorize the withdrawal of a sum of money to the tune of 27.434 billion Ghana cedis from the Consolidated Fund for the purpose of meeting expenditure necessary to carry on the services of government prior to the coming into operation of the Appropriation Act in respect of the 2021 financial year. So that figure has been confirmed, 27.43 billion Ghana cedis. That's what the Finance Minister will be requesting that the House approves as expenditure in advance going into the year 2021. We are all not too clear on why the Minister hasn't arrived in the House yet. But when you look at the other paper, which outlines the business that the House is supposed to deal with, this presentation that the Minister will be making to the House is supposed to come off after all the other businesses having to do with the Lands Ministry's report is concerned. So for the leadership of the House, they think there is no delay. They are only going by the order of business as has been outlined, but still we've not spotted the Finance Minister in the House.
All right, I guess the wait still continues. Joseph Opogaku, thanks for the update. We'll come back to you if there are any new developments. But joining me again via Zoom is Yaolate, who is head of financial advisory at Deloitte, as we look forward to the presentation by the Finance Minister. Great to have you on the program this afternoon. So we know that the Finance Minister is going to be seeking some 27 billion cedis to spend in the first 3 months of the year. Now, this is an unusual presentation because we know that it's an election year and we don't know which government will take over after the elections. But a few things are crucial to us. Election year overspending, the fact that we are dealing with a COVID-19 pandemic and it's going to continue into the next year. So I was making the point about the fact that we are expecting the Finance Minister out to spend some 27 billion cedis in the first 3 months of the year for whichever government comes into power. But there are things that are crucial. For instance, the fact that we are in an election year and there are concerns about election year overspending, and the fact that we're dealing with a pandemic this year as well, which would enter into the next year, which makes whatever amount whichever government assumes power spends in the first 3 months of the year very crucial. Tell us your expectations ahead of the presentation.
Okay, so thank you very much, Daryl. So in terms of expectations, we are looking at government addressing about 3 or 4 things. So the first one being fiscal responsibility, addressing the fiscal responsibility. The second one is COVID opportunities or COVID programs aimed at helping business recover. And the third one is debt sustainability. And the last one is what government is putting in place to support business take advantage of the continental free trade that's to take off early next year. So on the first point, fiscal responsibility, as was announced in the COVID budget sometime this year, government has so far suspended the 5% fiscal responsibility cap on spending, which means that government is going to overspend beyond the 5% that by law they were supposed to spend within. And this is much more in line with what other economies are doing, even countries in the EU, because of 2 points. The first one being the COVID situation that we find ourselves in. Government has planned expenditure. And the second point is about shortfall in revenue. So in the middle of this year, government announced a shortfall in revenue about 13.7 billion, arising from oil revenue that went down by about 5.3 billion, and also non-oil tax revenue about 5.3 billion, and other revenue source about 3 billion. So in all, government's revenue shortfall was about 13.6 billion. In addition, government has overspent about 11.7 billion on COVID alleviation programs to date. So as you know, we are heading towards a deficit situation. Our only concern is that government should try and stay within the global average, about 13.9%. So other countries have suspended their fiscal responsibility gap, but they plan not to go beyond 13.9% of GDP. And we are just advising government that in as much as they incur pre-election expenditure, COVID alleviation programs and the likes, they should try and stay within the 13.9% global average. If you go beyond that, then it's going to take a long time for us to recover from the pandemic and the adverse effect of the pandemic. The second thing that we also expect from government is programs that are aimed at helping businesses recover from the adverse effect of the pandemic. As you know, some sectors like the hospitality industry, aviation, oil and gas really suffered because of the adverse effect of the pandemic. We do not expect increases in taxes, that will cause these companies to really collapse. We are expecting tax incentives that will stimulate the growth of these sectors, as opposed to taxes that will cripple them.
Okay, and you mentioned the issues of debts, because that has come up in the last couple of weeks as well, the fact that debt stock is rising. And so for anybody who is planning the first 3 months of next year, what would be your major consideration?
I think the good point here is that government should fairly balance overspend within this period to alleviate the effect of the COVID, and then balance it fairly with our debt levels. Our country has been classified as a high-risk country in terms of potential debt distress. We are not HIPIC, as has been clarified, but we are high-risk countries, one of the sub-Saharan countries that have been classified as high risk in terms of debt distressed countries.
Right.
So in order to avoid that, I like the fact that government is now looking at opportunities within the Bretton Woods institutions to get debt forgiveness or debt cancellation. And I think it's one of the policies that we should pursue. Around about 2001, we also found ourselves in the same situation. In 2001, by the end of 2000, our debt to GDP ratio was 70%. And as we speak, we are about 76%. So the factors are still there, and there's the need to go for some debt relief, debt cancellation, or debt support from our development partners. Otherwise, you will struggle to recover from the pandemic.
Are you one of those who thinks that even though our debt levels are rising, we are well able to manage the situation? Because the IMF seems to suggest that, well, even though there is a problem there, they are quite confident we are able to manage it.
Yes, and the fact is, the difference is in two strands. So in 2001, our projected debt GDP ratio in 2001 was over 100%. Even though by the end of the year 2000, we were 70%, our projected debt GDP ratio a year after was going to be over 100%. So there was a clear case that we had to opt for the HIPIC initiative. But as we speak, our projected debt GDP ratio is about 76%. So next year, we are likely to go around 78%. So we are not going above the 100% mark. So there is quite a difference here because of factors such as the rebasing of our economy. So we have a stronger base and we are able to absorb more debt. But then the risk is still there that as we keep borrowing, we still exposing ourselves or taking ourselves to the point where we become a debt distressed country. And so government should keep its eye particularly on external borrowing, because the problem with external borrowing is that you have two factors. You have high interest payments and then exposure to exchange rate depreciation. So the problem we have now is that our external debt borrowing is about 35%, almost more than 50% of our total borrowing. So we should keep an eye on external borrowing and then avoid exposing ourselves to exchange rate risk as well.
Okay, we are not making so much noise about this presentation because obviously it's just for the first 3 months of the year. It's not a major thing, but really, how crucial is it for any government that is going to win power in December that this, whatever is outlined today, is on point?
I think government should be mindful of the fact that, there are two things. So the incumbent government wins power and then comes back. Now, if you win power and you come back, and then the economy has gone deeper into a hole, it takes you a long time to recover and begin to implement the program that you promised in the electorates. So government should be mindful of the fact that if you go deeper into the hole, it will take you a long time to be able to implement the program that you've promised. And also when there's the table turns and it goes the other way, then you still have the problem of having had to deal with these issues by a different government. So I think that government should fairly balance all the programs that it's implementing, all the pre-election expenditure in line with its plan to recover the economy post the pandemic. Otherwise, it will take us a long time. As we speak, the Economic Intelligence Unit has projected a contraction of the economy. We are going into a recession. Right. That's the first time in about 5 years that Ghana economy is going into a recession. So if you go into a recession, it's going to take us a year or two to recover. And so government should be mindful that it doesn't overspend beyond the target that's set for itself.
All right. Yaw Lartey, Head of Financial Advisory at Deloitte, Ghana. Thanks very much for your time and your insights this afternoon. We keep waiting for the finance minister. I don't know if we can show Parliament right now as you continue to monitor the feed from there. As we await the finance minister to make that presentation of the interim budget for the first 3 months of next year, would certainly take you there when he arrives. We are monitoring for you and hopefully talk about our expectations for the finance minister's presentation later in the day.